Hey, this is Drew Page. Welcome to the Drew Page channel. In this video, I want to answer the question, should I stop investing in real estate? If you've been watching the news at all, you've heard all about the increased price of real estate and how much real estate prices are. And it's certainly at record highs. I mean, mortgages have been up, prices have been up, demand has been up. Why is real estate in such high demand and why are the prices so high? And the key to that is going to answer the question about why you should consider still investing in real estate and why I'm still considering investing in real estate. So, why would we still consider investing in real estate when it is at all-time high prices? Well, one of the things that we need to consider is the level of demand. See, this is the part that people aren't considering. Videos from all the financial YouTube influencers are all suggesting, well, I'm going to stay away from real estate because prices are high. You know, at some point the market's going to drop, especially with the Federal Reserve coming in for interest rates and all these things in March. But it's not about interest rates, right? Because, I mean, there were times in the 70s where interest rates were, in 80s even were 10, 11% interest rates. And if the Federal Reserve raises interest rates to 0.25 basis points, we're talking about a very minimal rate increase. So is that really going to drive the prices down? I don't think so. And here's the reason why. Number one, there's an issue of supply. You know, with all of the supply chain problems that are going on, instead of a house taking, 6 to 8 months to build, it's taking 10 to 12 months. So people who are wanting to build new construction are running into supply chain problems. And that's already exacerbating the supply problem we have before builders are even starting. I mean, new construction is down with all the restrictions and things that aren't grandfathered in. There's just less supply. And so if there's still going to be an increased demand, even when the interest rates increase, it's not going to necessarily bring the prices down. It may slow things down for a bit. It may cause some people to kind of think twice before entering the market. But ultimately, if people want to buy a house, they're going to have to get a mortgage on it. The second reason why the demand is still high is because large institutions are coming in and purchasing single family homes because they recognize the demand problem and the lack of supply that's coming in. So companies like Blackstone and Goldman Sachs and JP Morgan, they're buying up single family homes. Grant Cardone's picked up on this, and which is why it's interesting that he says you should stay away from single family homes, even though the big multi-billion-dollar companies are purchasing these homes. So if you've got for instance, let's say you get a lump sum personal injury settlement, like a lot of my clients been representing personal injury clients for over a decade, and they get a lump sum of money and they're trying to figure out how to invest it. Yeah, they can certainly invest it in the market because the markets are at all-time lows, and that may not be a bad thing. But I wouldn't stay away from real estate because it's likely that is still going to increase in value. And if you're buying it for rental income, you're still going to get a regular monthly cash flow to pay down the debt and the equity, to increase equity on the house by debt pay down. And then you're also going to have profits from your cash flow. So it's still going to be making you money, even if interest rates are a little higher. It's not going to make any difference. And while you're waiting for this market crash to happen in real estate, it may come, it may not come. But at the end of the day, if there's less demand, then the price is still going to be high. Or if there's more demand, the price is still going to be high. It doesn't matter that interest rates are going up. People still need a place to live, and these institutions know that. So what I'm looking for are, duplexes, triplexes, quads, and maybe even single family homes that are in good neighborhoods, that are close to where I live, that don't cost a whole lot, but they may be more than what they were, 2 or 3 years ago. And that's okay, as long as I'm following the 1% rule. And, we'll do another video about that at some point, where basically, as long as your monthly rent is about 1% of the total price, then you're probably going to be okay. So, what would I do? I'm still looking in those areas for townhouses, condos, duplex, triplex, quads. If I can get an apartment building, I'll do that. We'll see how that comes. But I'm not going to stay away from real estate just because prices are at all-time highs on national averages, because there's such demand for houses. And by the time we get the supply chain problem worked out, it's not going to impact whether I should invest in real estate. So all of the financial people on YouTube are telling you to stay away from rental properties and stay out of real estate because prices are too high. They're not understanding the demand aspect of it, and that the cost of replacement is just so much more expensive than to buy a home that's already there. Yeah, the price may be at its all-time high, but if it's making you a monthly cash flow, who cares? Do you think that it's going to go down over the next decade? I mean, when you're buying a house, you don't buy it so that you can just turn around and sell it within the next year anyway. Grant Cardone actually does a refinance, so he keeps his properties forever. Refinances, takes money out. It's a non-taxable event because it's a loan. You're just getting a cash out refi, and then he takes that money and goes and invests in more. So it's not like you're buying it to flip it. You're buying it to hold it and let it cash flow and appreciate. And so you have to ask yourself, yeah, prices are all-time high, sure, but what is the likelihood that it's going to be less in value than what it is right now 10 years from now? And the answer is that it's probably going to be more valuable even at all-time highs now. So I would not follow the advice of people who say to absolutely stay away from real estate because of the Federal Reserve interest rate hikes and because prices are at all-time highs. All that matters is location, cash flow, and being willing to be a long-term investor. It's really not much different than being in the stock market as far as looking at the long term as opposed to short term. So if you're one of my personal injury clients and you get that lump sum settlement, I'm not going to tell you to absolutely stay away from houses just because they're at all-time high prices. There's still going to be gems out there. You can look for things off market, and I'll be glad to help answer any questions I can with that. What do you think of this advice? You think that it's a good idea to stay out of the real estate market and that I'm totally crazy? Put it down in the comments. Let me know. If you think that this video has been helpful, please like it, subscribe to my channel, hit the notification bell, and until next time, stay tuned.